Now we go to question 5th. First we read the question carefully and give proper placement of each item in question. Before that we have to see what we have to prepare. In the last sentence it is given that pass journal entries in the books of both firm and balance sheet of new firm. The journal entries are made with the help of modern rule. We give here the rule is that if asset is increased means plus, it is to be debited. Assets decrease means minus is to be credited. If liability increase, it is to be credited, and liability decrease is to be debited. Expenses and losses are debited. Incomes and gains are credited. With the help of these rules, we make the accounting entries. Now we read the questions. Following are the balance sheet of the two firms, Messrs. Mahesh and Anil and Messrs. Rahul and Sunil, as on 31st March 2020. Land and building, plant machinery, patent, stock, debtors less RDD, again debtors less RDD, investment, cash, goodwill. On liability side, creditors. General reserve is to be transferred to partners capital account. Capitals. Now in paragraph, Mahesh and Anil share profits or losses in the ratio of 3:2. We have to divide the general reserve in the ratio of 3:2 ratio. The two firms decided to amalgamate on the following terms. Investments were not taken over by the new firm, but were to be distributed among the Mahesh and Anil in the ratio of profit share ratio. Here investment rupees 5,000 is to be distributed among the partners in the ratio of 3:2. Goodwill of Mahesh and Anil was rupees 20,000. Here goodwill of Mahesh and Anil rupees 12,000, valued rupees 20,000. It means increase by rupees 8,000. Now, and that of Rahul and Sunil rupees 40,000. Here Rahul and Sunil goodwill is not given. The separate accounting entry will be made for goodwill purpose. Goodwill was not to remain in the books of the new firm. Not to remain in the books of new firm, it means it's to be written off in the new firm books. We have to make an working notes for this purpose. Patents of Mahesh and Anil were valued rupees 15,000. Here patent of Mahesh and Anil rupees 10,000, valued rupees 15,000. It means increase by rupees 5,000. Stock at rupees 30,000. Here stock rupees 25, valued rupees 30. It means we have to increase by rupees 5,000. A provision of 5% was to be created for bad debts on debtors of both firms. We have to take out the debtors of both firms and we have to make an 5% RD. Here also 5% RD. Adjustment 5th. The plant and machinery of Rahul Sunil was to be written down to rupees 25,000. It means it is to be decreased up to rupees 25,000. Here plant machinery of Rahul and Sunil rupees 30 decreased to rupees 25,000. It means decrease by rupees 5,000. Now next, the stock of Rahul and Sunil was found is past tense overvalued by rupees 2,000. It's already overvaluation of stock by rupees 2,000. We have to decrease by rupees 2,000. Here stock of rupees 20,000. It will be decreased by rupees 2,000. The patents of Rahul and Sunil were to be valued rupees 8,000. The patents of Rahul Sunil here rupees 5,000. It's a value rupees 8,000. It means increase by rupees 3,000. The new firm profit share ratio was to be 2:2:2, 3:3. The capital of new firm was to be 2 lakhs and the partners paying in cash or withdrawing in cash as the case may be to make their capitals in their profit sharing ratio. We have to make an working notes for this purpose. Now we go to answer sheet. Answer sheet is like this one. A part. In the books of Messrs. Mahesh and Anil, journal is date particulars, LF, debit, credit, rupees. Now we go to see the account entries. First transaction, investments not taken over by the new firm but we have to be distributed among Mahesh and Anil in the ratio of profit share ratio. Here investment rupees 5,000 transfer to partners capital account. Partners is the receiver or investment is goes out. It is to be credited partners capital account debit to investment. We make the entries. Mahesh capital account debit. Anil's capital account debit. To investment. Rupees 5,000. 2:3 proportionate. Here 3,000 and here 2,000. Ratio is 3:2. We close the first transaction. The accounting entries are without narration. Students are required to make the narration of each entries. Now second transaction. Goodwill of Mahesh and Anil was rupees 20,000. It means 8,000 it will be increased. Accounting entry will be goodwill account debit to a revaluation account. Rupees 8,000. Second transaction is a goodwill account debit to revaluation account. Now next one. Patents of Mahesh Anil were valued rupees 15,000 and stock had to be 30,000. Patents we have to increase and stock also we have to increase. Both assets are to be debited. We write combined entry. Patents account debit. Stock account debit. And to revaluation account. Rupees 5,000, 5,000. Total comes rupees 10,000. Next is fourth adjustment. A provision of 5% was to be created for bad debts on debtors of both firm. Here, debtors rupees 10,000. 5% it comes 500. Here, old RD is also 500. New RD and old RD is the same. Therefore, debtors is to be transferred as a same as it is will be transferred to new firm. No entry will be made for RDD purpose. Now next up, we have to find out the Mahesh Anil's. Okay, nothing else. Now we see the in adjustment or in balance sheet what we have transfer. Now we have to transfer of JR. General is original balance credit. While transferring, it will be debited. We make the entries. 4 transactions. General reserve account debit to Mahesh capital account. And to Anil's capital account. Rupees 10,000. Proportionate 3:2. It comes 6,000 and 4,000. Now we find out the revaluation profit. We see what is the revaluation credited. Here 8,000 is credited and again rupees 10,000 credited. Revaluation account debit is nothing. Then profit will be 8,000 plus 10,000. It means 18,000 is profit. We transfer it to new partners capital account. Accounting entry will be made. Revaluation account debit to Mahesh capital account and to Anil's capital account. Here 18,000 and proportion comes 3:2. It proportion comes 10,800, 7,200. Now, next one. Second last entry is a transfer of assets and liabilities. 6th transaction. We have to transfer all assets and liabilities. Here, RDD rupees 500 will be debited. RDD account debit rupees 500. Syndicated will debited. Rupees 28,000. New firm account will debited. It's a balance figure. Now we have to transfer asset sides. To plant and machinery, rupees 20,000. Next is patents, rupees 10 plus 5, 15. Next is stock, rupees 25 plus 5, 30. Next is two debtors, rupees 10,000. Next is cash, rupees 6,500. And last one, goodwill, 12 plus 8, 20,000. Now we have to find out the difference. Difference is 73,000. Now we close the sixth transaction, and the last transaction is a transfer of capital. Here, while transferring capital, it will be debited. Mahesh capital account debit, Anil's capital account debit, to a new firm. We find the balance by making working notes. Now see here, Mahesh capital rupees 40,000, Anil capital rupees 10,000. In adjustments, Mahesh capital here debited will be subtracted, credited will be added. Now see here, Mahesh capital rupees 6,000 credited, we have to add 6,000, and Anil capital rupees 4,000, we have to add 1. Again, we have to add profit, realized profit, rupees 10,800, and here it is 7,200. Okay, we make the totals. Total is 56,800. Here 21,200. From this one, we have to subtract rupees 3,000 and 2,000. We subtract 3,000 and 2,000, and answer comes here 53,800. Here 19,200. This is the capital which is transferred to new firm. Now Mahesh capital 53,800. Here it is, and Anil capital 19,200. Total of this one 73,000, and this amount is equal to this one figures. This is the tally. The account entries are correct one. Now we go to B part. B part is like this one. In the books of Messrs. Rahul and Sunil, journal entries, date, particulars, LF, debit, credit, rupees. Here we have to see the adjustment of Rahul and Sunil. In a second adjustment, goodwill of Rahul and Sunil valued rupees 40,000. Here original goodwill is not given. We make the direct entry. Goodwill is an asset. It will be debited. Goodwill account debit to partner's capital. We may write here it is. Goodwill account debit rupees 40,000 to Rahul's capital and to Sunil's capital. Equal proportion rupees 20,000. Entries are without narration. Students are required to give a narration of each entries. Now second transaction. For transaction, a provision of 5% was created for bad debts on debtors of both firm. Here Rahul Sunil debtors is a 16,000, 5% it comes 800. New RDD rupees 800, but here old RDD is given. New minus older, 800 minus 600, 200 is a excess RDD is required. Account entry will be made as revaluation account debit rupees 200, to RDD. We may write here it is 800 minus 600 already it's come 200. Entries are without narration. We close the second transactions. Now third transactions. The plant anniversary of Rahul and Sunil written down to rupees 25,000. Here plant anniversary 30. We have to subtract 5,000 is decrease is to be credited. According entry, revaluation on debit. To plant anniversary. Rupees 5,000. Now, fourth transactions. The stock of Rahul Sunil was found overvalued by rupees 2,000. Here, stock of we have to deduct 1, subtract, decrease. It is to be credited. Same entry. Revaluation on debit. To stock account. Rupees 2,000. Now, fifth transaction. Patent of Rahul and Sunil valued rupees 8,000. Here, patent fees 5,000. We have to increase 3,000. Asset increase, it is debited. Patents account debit. Rupees 3,000 to a revaluation account. Rupees 3,000. Now, sixth transaction. This is the new form adjustments. Now, see in adjustments or in balance sheet, we have to find out the profit or loss. Here, we have to find out the revaluation credit items. Here rupees 3,000 and debit. Here rupees 200 plus 5,000 and plus 2,000. It means 5 plus 2, 7, 7 plus 2, 100, 7,200. 7,200 minus 3,000, it comes 4,200 is a loss one. Debit is excess, therefore it is a loss. Loss transfer to partners capital. Accounting entry will be partners capital to revaluation account. Here, Rahul's capital account debit. Sunil's capital account debit to revaluation account. Rupees 4,200 in equal proportion rupees 2,100 is a revaluation loss transfer. Now in 7 transaction, all assets and liabilities transfer to new firm. While transferring all asset liabilities, liability balance original credit will be debited. Here first we write RDD account debit. It's a new RDD. We have to write rupees 800. 5% on 16,000. It's 800. Next is a sundry creditors account debit. Rupees 23,000. Next is a new firm account debit. This is a balance figure. And all assets will transfer to new firm. It is to land and buildings. Rupees 50,000. Next is plant and machinery. Rupees 30 minus 5, 25. Next is patents. 5,000 plus 3,000, it's 8,000. Next is stock. Rupees 20 minus 2, 18,000. Next is debtors. Rupees 16,000. Next is cash, rupees 2600. Next is goodwill, rupees 40,000. Okay, now we have to find out the difference, total of credit sides and deduct debit items. Difference will be appear in new form account. Difference is 1,35,800. Now we close the 7 transaction. And last transactions is a transfer of capital. Accounting entry is Rahul's capital account debit, Sunil's capital account debit, and to new firm account. We make the working note. We have to find out the Rahul's capital in balance sheet, rupees 50 and 50. We write here it is 50,000 and also 50,000. Now we have to add one credit items. In first line, first transaction, Rahul's capital account credit 20 and Sunil's capital account 20 will be added. We add here it is 20,000 and 20,000. Totals 70,000 and 70,000. From this one, we have to deduct partner's capital account debit. Here at 6th transaction, partner's capital debit 2100 and Sunil capital 2100. It will be deducted rupees 2,100. Here 2,100. Now we deduct this one 67,900 is the balance capital which is transferred to new firm. We make the entries. Rahul capital 67,900 and Sunil also 67,900 and total comes rupees 1,35,800. Its total is equal to the new firm account 135,800 is equal. This is the tally and we close the B part. Now we go to third part, balance sheet. C part is like this one. Balance sheet of new firm as on 1st April 2020. Liabilities rupees, asset rupees. First we try to complete the asset sides. Here land and building rupees 50. We write first line land and buildings. Rupees 50,000. Next is plant and machinery. Mahesh and Anil rupees 20,000. Rahul and Sunil rupees 30 minus 5 25,000. Total comes 45,000. Next is patents. 10 plus 5 15. Mahesh Anil rupees 15,000 and Rahul Sunil 5 plus 3 8,000. Total comes 23,000. Next is stock. Mahesh and Anil 25 plus 5 30 and here 20 minus 2 18. Totals 48,000. Next is debtors. Mahesh Anil rupees 10,000. Rahul Sunil rupees 16,000. Totals 26,000. Again we have to deduct RDD at 5%. It comes 1,300. Answer comes 24,700. Next is cash is to be changed with the adjustment of capital. Goodwill is to be written off. We make the working notes for adjustment of capital, working note, adjustment of a capital. 4 partners: Mahesh, Anil, Rahul and Sunil. First we write transfer capital. Transfer capital of Mahesh is that 53,800 and 19,200. 53,800 and 19,200. Now Rahul's capital 67,900 and Sunil also 67,900. We have to subtract goodwill written off. Goodwill written off. Total goodwill 20 plus 40, it means 60,000. We write here it is 20 plus 40 is a 60,000, which is in the ratio of new ratio 2:2, 3:3. In proportion comes here 12,000, here also 12,000, here 18,000, here also 18,000. Now we subtract. $41,800, here 7,200, $49,900, $49,900. Again we have to require less adjusted capital or required capital. Required capital. Now see in adjustments. Here required capital rupees 2 lakhs, which is in the ratio of 2 to 3:2, 3:2. Rupees 2 lakhs in the ratio of 2 to 3:3. This one ratio. And proportion comes here 40,000. 40,000, here 60,000 and 60,000. Now we make the compare between transfer capital or balance capital and required capital. Here balance capital is 41,800 and required capital 40. It means surplus capital rupees 1,800. Surplus capital is to be refunded. It means cash is to be deducted or minus. Here capital, balance capital is a shortage capital. He is to require bring additional capital. We find out the difference. 32,800 is equal to bring by Mr. Anil. It will be added in cash account. So in this, here also balance capital is a shortage capital. Required capital is 60,000. We make the difference. Rupees 10,100 is a cash will be added. Here also 10,100 cash will be added. These three amounts are added in cash account and this will be subtracted. We make the in balance sheet as a cash and bank balance. Cash and a bank balance. Mahesh and Anil. Original cash rupees 6,500 and Rahul and Sunil rupees 2,600. We make the totals 9,100. Now we make here total exist. $50,000, 3,000 is to be added and 1,800 is to be subtracted. So we add here 53,000 totals and deduct rupees 1800. $60,800 is the cash and bank balance. Now we go to balance sheet liability sides. First we write the capitals. Partner's name is Mahesh, Anil, Rahul and Sunil. It's a adjusted capital we 40, 40, 60, 60. We write here it is 40,000. Here also 40,000, 60,000 and 60,000. Totals 2 lakhs. Now we read the creditors, syndicates. Mahesh Anil creditors will be 28,000 and Rahul Sunil creditors will be 23,000. Total 51,000. Okay, now see what's remain. Nothing else. We go to close the balance sheet. Total of balance sheet is 2,51,000. Here also 2,51,000 is the total. This is a complete answer. See once again. Now we go to close the answer sheet. Okay, thank you.